Boom! What is up, Waves Capital? It's Royce Jacob. Welcome back to the channel, and in this video we are going to be talking about a few upcoming events that are likely to create some major headwinds for the markets over the following weeks. Now, I know the economic picture has been pretty dark for quite a while now, probably 6 months or so, and many investors out there don't think it can get worse or can't imagine a scenario and where it gets significantly worse than it is now. But personally, I think it's very obvious that it can get worse, and I want to talk to you about why that is in this video. Okay, on the brighter side, I also want to talk to you about how you can hedge your portfolio and keep your portfolio safe during these hard times and even make some money like we have been over at Waves Capital. When the market goes down, there are ways to make money, put options being the primary way to do so. So we'll talk a little bit about how you can make money in a bear market closer to the end of the video. And I also want to talk to you guys about what I plan to do with many of the profits that I've gotten from some of these short positions and plan to continue to get from these short positions over the coming weeks, because I do believe there are some very, very promising opportunities in regard to many growth stocks we've covered here on the channel in the past. And I want to talk to you guys just kind of about my general game plan over the following weeks, as if, in the case that we do continue to correct, what my game plan from here is going into the later fall into winter months. Okay, so that's the video, you guys. Before we dive into it, I want to quickly go over each of the subjects, each of the tabs that we're going to be discussing today, and then we'll dive into each one individually. Okay, so to kick it off, I just want to read the trade alert / macro analysis newsletter that I sent out to Waves Capital this morning, newsletter subscribers and portfolio members. Okay, so over this, cover the jobs report that's coming out tomorrow at the time of recording. Maybe you guys are watching this on Friday, it would have come out. Please let me know in the comments down below if you happen to be watching this video after the fact. Let me know what happened. Let me know if I was right, or rub it in my face if I was wrong. Okay, so we'll talk the jobs report. We got to talk inflation, the CPI data, and of course there are some major earnings coming out. And I will also reference again kind of the plan of attack early, then we can expand on it later. So we'll read over this first. I then want to move on to the earnings calendar, because Q3 earnings season is right around the corner. It kicks off next week with the big banks. You can see pretty much every company, every major company under the sun is reporting over the coming weeks, not next week, but over the coming weeks. Big banks, major banks, JP Morgan Chase, Wells Fargo, Citigroup kick it off next week, next Friday, which is the day right after the CPI report. So we have a busy week next week. And just right off the bat, little PSA, stay on your toes, guys, because the markets, although they've been volatile, this next week should be pretty crazy. Okay, so just stay on your toes, stay alert. Next, I do want to quickly reference a kind of a breaking news piece just to set the stage and kind of reinforce my bearish opinion on what Q3 earnings are to bring. Analyst estimates have been tampered down, rightfully so, but they're still pretty high when you take into consideration the average. The median might be different, but when you take into the average analyst estimation for Q3 growth, it still seems high. And AMD just announced today, demand is bad, Levi Strauss, shares slipping after they cut guidance. There's just a lot of signs, Nike earnings before, that point to a very, very even darker than expected, even bleaker than expected Q3 earnings season. Okay, so that's another catalyst. Once again, the final catalyst that we're going to be talking about is the CPI inflation report that comes out on October 13th. And we're going to read over this Forbes article just real quick, a few sentences here, on why, although many believe that inflation should be cooling, here's what I believed last month, and it wasn't. Month to month, inflation could still be on the rise. So we'll talk about this, talk about why this is also bad news for the markets. And then to close it out, we got to talk some technicals. We're talking a lot of fundamentals to open up the video. We'll close out the video on the charts, go over the Dixie, which is the US dollar index, the strength of the US dollar relative to other global fiat currencies. Dollar looking so strong on an absolute tear, and it looks like it wants to go even higher. Dollar's up, you guys. This is the golden rule of macro trading 101, macro investing 101. When the dollar is appreciating in value, it's pretty likely that every other financial instrument that trades against the dollar, which is everything, because the dollar is the global reserve currency, is going to depreciate. Dollar up, everything else for the most part. There are caveats, of course. for the most part, everything else is down. So dollar looking strong. That is not good news for gold, silver, the S&P 500, the NASDAQ, Bitcoin, Ether, you name it. Trades against the dollar, probably not going to do well, okay? So we're going to kick it off with the dollar. I quickly want to take a look at the S&P 500, the benchmark ETF for the U.S. equity market. And we'll close it out with Bitcoin just because I haven't covered it on the channel in a minute. I guess the last video was. But I'll give you guys my updated take on Bitcoin and why, although we did recently break out, why it's just not, I'm just not sold yet, and why there are some actual red flags popping up, okay? So that is the video, you guys. Before we get into it, before we get to reading, please give it a like if you go on to gain value from it today. Subscribe to the channel if you're new around here and want to catch more content like this. Bear markets aren't as fun as bull markets, but there is always a bull market somewhere. And I will always do my best to bring you guys that bull market and do my best to make you guys some money. And let me know in the comments down below. Have you been on board with me? Have you been part of Waves Cap, like the actual portfolio group? Have you guys been making money during these hard times? And let me know if you guys are excited for the times ahead and what your take on the macroeconomic backdrop is right now. Have we bottomed out, or is more downside ahead? And please do your best to articulate your thoughts and bring some value to the conversation, okay? So it's Thursday. Again, time of recording, sluggish session. Markets were very slow today as investors await Friday or tomorrow's jobs report. The street wants to see unemployment numbers up, which in turn will aid the Fed in combating inflation and expedite the process of eventually reversing rates. Again, the Fed wants to see pain. Destroying consumer demand is part of those jobs. Grinches. They're trying to take away Christmas from the kids this year, and they might be pretty damn successful at doing so. Unfortunately. Not for us, though. Not for us over here. And I'm very thankful for that. And you guys should be as well. But there are varying data points that lead to different results. Hiring numbers rose, but job openings within that same report dropped 10%. Here's coverage of the JOLTS report. So I'm not going to dive into this right now. But again, some precursors to the jobs report that's coming out tomorrow, the one that everyone really pays a lot of attention to. Some precursors to this are looking like it might not be looking too good in terms of investors seeing what they want to see and thinking it might encourage the Fed to slow down. So not good for the markets. It is possible for the job report to spark investor optimism if the numbers are right. But personally, I see this having little to no effect on Fed tone regardless. So even if the numbers are what investors want to see, personally, I can imagine the market's popping a little bit because investors are going to play the game theory. They're going to think everyone likes that. Markets pop immediately to be sold off because everyone is aware that the picture remains bleak. And I mean, the Fed is not going to change their tone, especially if the September CPI report, which once again, we're going to be talking about after this, coming out on the 13th, does not show inflation meaningfully cooling. And by that, I mean like a full 1 to 2%. If it's 0.5% cooler, if it's cooling down, if it shows signs of peaking, if it's even, or I'll just say if it's anything under if it's in the decimals, if it's less than 1% month over month, I don't think anything's going to happen. I actually think that's bad because people want to see inflation really cooling. If inflation cools by 1%, we're down to what, like 7%, over 7% still. The Fed wants to get it down to 2%. Nothing's changed, okay? We're on the right track, but we're not even close to the Fed potentially pivoting. And that's what you have to keep in mind. It's critical, and this is a very important point to understand. It's critical for the Fed to maintain their aggressive stance until they're ready to pivot, because the markets will begin to price in weakness if they sense it. So by that, again, if JP comes out and starts saying they're thinking about slowing down rates, maybe they'll reverse in 2023. The markets are going to rip because the markets can then price in rate cuts already. Okay? That's not what the Fed wants because that reverses the progress that they've already made. The stock market going up is not good for the Fed. Asset appreciation is not what you want when attempting to fight inflation. Okay? So JP knows this. JP knows that the markets are reactive, that they're listening to everything, that they act fast, and they price everything in. So until they are ready, until like the second they are ready to actually pivot, they're not going to change their tone at all. They're going to be hawkish. They're going to stick to their plan. They've already looked stupid enough over the past 3 years. If they go back now and they mess up again, it's just like they've already lost so much investor trust that's just kind of like they're just popping themselves at that point. Okay, so let's close it out again, kind of on a higher note. Before we discuss trades, I do want to address the fact that small caps and growth stocks continue to gain strength relative to large caps and legacy names. Based on our positioning, this is a market dynamic that will become increasingly lucrative for Waves Cap. So again, have a lot of puts on deck, but I have a lot of call options on deck too. Shorter expiration on the puts. I'll just give you guys some transparency into the portfolio, not go into super detail out of respect for, of course, the members of Waves Cap, but shorter expiration on puts, because I think the short term is going to be red, a lot more blood to come. Longer term on calls, and again, I'll continue to use the profits from these puts to reinforce these longer term call positions, because again, I'm still bullish on the long term. Everything's ultimately going to go back up eventually. It's just a matter of when, okay? So timing is everything. Always keep that in mind as well. I trust this trend will persist. I'm feeling good about our picks, and so far we've done pretty well. So again, there are always winners. This is a stock pickers market. This will continue to be a stock pickers market. I mean, Tesla is a great example of a name that has done exceptionally bad recently. A lot of Waves Capital's put positions and put profits, I should say, have been in Tesla. I still think that name has further down to travel. There are many names that could go down, but there are many names that are withstanding the storm and could go up. Many names that we've covered here on the channel in the past, and that I continue to be bullish on because those are great companies that have gotten oversold and I believe are undervalued relative to many of the large caps and stuff, okay? So, feeling confident there, you guys. Before we dive into the earnings calendar, and I can actually zoom in. Let's try to zoom in on this a little bit, okay? Before we dive into this guy, if you do want to join Waves Capital, for real, you guys, then hit the first link in the description box down below. That'll take you to this page right here. From here, you obviously click on Complete Portfolio Daily Newsletter. When you do that, I'll bring you to this page. This is where you sign up. If you want to join Waves Cap, again, you guys, if you want to step up your trading investing game, not copy me, hopefully, but learn from my failures, learn from my successes, and of course, you do receive everything that it entails here. All of my positions in my entire portfolio, personal portfolio, which I update every single trading day during market hours. And with every update, I send out the trade alert and price targets newsletter. Watch, take a look at the price targets newsletter after this and kind of what that entails. But just some charts, real-time price targets for you guys on a daily basis, every single trading day, every single morning, at least for me in Hawaii, during market hours. And yeah, I look forward to seeing you guys on the winning team. You're going to be able to select from any of the pricing options you see below. That's completely up to you, but you can even try it for free. And if you don't like it, just unsubscribe. It's all good. So that said, I'll see you guys in there. And again, welcome to the winning team in advance. Let's move on to some earnings. Third quarter earnings season will begin in earnest during the second full week of October, led by banking giants JP Morgan, Wells Fargo, and Citigroup. Analysts at U.S. financial data group FactSet estimate an earnings growth rate of 2.9% for the S&P 500 companies, which marked the lowest earnings growth rate reported by the index since Q3 2020. So let's think about this, you guys. And this is kind of what I'll mention on the charts as well. We can just jump straight into the spot on the charts, you know. Zoom out real quick. February 2020 all-time high. Just give you guys a glimpse. I've talked about this many times in the past, so it's not really a spoiler, but mean reversion. This is the level I feel needs to be reached before the S&P 500 officially bottoming out and be able to begin the bull market once again. So I'll talk about why that after. But again, you guys, think about the economic climate right now. Think about consumer demand, consumer spending. Are people spending as much as they were before the pandemic in February of 2020? Again, the stock market is not the economy. That's important to understand. But I think most of us can agree that now things are significantly worse from an economic and consumption perspective than they've been over the past at least 5 years. So when you look at where we were in January of 2018, if you guys think back at that time, pretty good times, right? Probably spending a lot more than you were in this moment. The S&P 500 was at 285. Right now, from those 2018 highs, stock market's up 30%. Do you think the economy, again, monetary policy, fiscal spending, the Fed intervention does affect this from like an inflationary perspective, of course. But regardless, do you think, just for a thought experiment, do you think consumer spending is your economic behavior 30% higher than it was in January of 2018? I know it's kind of hard to think back at that time specifically, but I'm sure you can agree just for the purposes of this example that they probably weren't, right? You're probably spending a lot more. You're probably a lot more excited about potential spending and about Christmas back in 2017, 2018, 2019, okay? So Just think about it like that, you guys, and that's how I personally think about it. So even a growth rate of 3% seems extremely unlikely to be. I can envision many companies out there. Again, there are going to be a select handful of winners, but I can imagine many companies out there who don't see any growth and who see negative growth, because that's what we've been seeing, and no one's spending any money. So it just seems very obvious to me. Again, just anecdotal boots on the ground. Look around you. People aren't spending. When people aren't spending, coming out of an environment where people are spending exorbitant amounts. Jesus. Sorry, I'm burping at the same time, of course. Excuse me. Anyway, spending crazy amounts of money coming out of COVID, coming off of stimmy checks, helicopter money, unemployment, etc. That creates for negative growth, and that's what we're going to see, and that's what the Fed wants to see, because the Fed wants to destroy demand in order to combat inflation, so we should not see growth. So I think 3% growth is very generous, and yeah, just be aware, you guys, because all these names over the coming weeks are going to be reporting. Friday, October 14th is when those banks we just mentioned release their earnings. Pepsi is releasing earnings the day before the CPI report. Thursday, October 13th, once again, is that CPI report, which we'll be covering. And yeah, things are about to get crazy, you guys. I mean, again, Micron disappointed on earnings recently. The chip maker, that means AMD, who just issued this warning, which we'll cover right now, is probably going to look pretty bad. Nike, again, a pretty global benchmark for international consumption and like frivolous spending and shoes, just athletic wear, athleisure, whatever. If people don't have money for food and gas, they're definitely not going to be buying Nikes. Nike's earnings were terrible, and they have such an excessive amount of inventory that it was like really the big catalyst for negative earnings. So again, you guys, no one's doing well. Companies that you think would do well, not doing well. And it's just like maybe for some pharmaceutical companies, energy companies will do well. But again, you guys, for the most part, speaking in generalized terms, things are looking very bleak. Okay, and I do think Q3 earnings season is going to be rough. Also, for Waves Cap, relative to Waves Cap, Wednesday, October 19th, we do have Tesla reporting earnings, and that should be a fun time. Okay, so anyway, let's talk about this really quickly. AMD stock fell in overnight trading. Chipmaker warned its third quarter revenue would be lower than anticipated. Levi's Strauss shares slipped, falling a cut into guidance. So Levi's similar to Nike again. Jeans, no one's buying jeans if you can't buy gas. AMD saying the demand for computers, for laptops, is lower. That's why Apple, which again, maybe potentially another position in the Waves Capital short portfolio right now. The two generals, if you guys know, you know. But Apple falling heavily in after hours. Imagine Intel. Anyone who sells laptops, anyone who sells digital goods. Again, same thing, you guys. When you don't have money, or when you're tight on money to spend at the grocery store, groceries up, gas up, when you're running out of money, you're not going to be spending it like you were a year ago on a new MacBook, on a new set of Nikes, on a new pair of Nikes. That's just on a new pair of jeans. That's just the game, okay? And that's just, again, just think about it. Just think about that. Okay, so let's quickly read over this, and then we can dive into the charts and call it a day, okay? So, latest inflation nowcast. As such, the recent inflation nowcast from Cleveland Fed is disappointing. The nowcast for October CPI the nowcast for October CPI is estimated plus 0.7 month on month, compared it to a plus 0.03. Come on, Forbes. Edit this. Nowcast for September CPI with core CPI at plus 0.5% for both September and October. These are not encouraging figures. If core inflation is at 0.5% month on month, if sustained, that translates to over 6% year on year inflation. The Fed's target is 2%. Okay? So it's still not good. Again, you guys, this is maybe we do slow down. But like I said in the beginning, unless it's like a hard cut and it looks like inflation is actually cooling in a way that is sustainable and meaningful, then it's not going to change the Fed's tone at all. And even if it is, the Fed's tone is pretty unlikely to change. Okay, so even in the case, and I'll just say this for future reference, even in the case that inflation is cooling very meaningfully, we get like a 6% read or something crazy like that for September CPI, which I don't think is likely. Even if we get like a 7% read, which would be pretty damn impressive, maybe the markets rip up until the Fed meeting, but I think the Fed meeting is just going to reinforce the bears, because they're not going to change their tone, even if it's at 7%, even if it's meaningfully cooling. They're not going to change until they're ready to pivot. And once again, That's very important to understand as a trader. So what's a nowcast? Just to preface this, rather than making an expert prediction about the future, a nowcast simply combines the data we have on inflation today to predict where prices will come in. Okay, so nowcast, not a forecast, not a precast, I guess, a nowcast. Okay, so just to elaborate on that. That's that, you guys. Again, we have Q3 earnings. We have the jobs report, which comes out tomorrow. And we have the CPI data from September coming out on October 13th. So mark those 300 calendars. Going to be a crazy ride over the following weeks. I'll just talk to you guys quickly about some of my SPY targets. Again, mean reversion. Same as Bitcoin seeing $20,000. Bitcoin could absolutely fall lower. We'll cover Bitcoin once again after this. Could absolutely fall lower. But once an asset retests the prior high or initial high from the overall bull market cycle, for the SPY, it's prior to that, of course, pre-pandemic sell-off, the Black Swan sell-off back in March of 2020. But the all-time high prior to that sell-off was in February of 2020 at 300, just under 340. So for the SPY, my target's 340. If we look at the SPY here, go a little shorter term, 4-hour Stokes curling down, things looking pretty damn bearish. And I do just want to read quickly over this. Technicals rough, further mean reversion is required. Again, mean reversion, what I'm just saying, a revisit of that initial high or a revisit of the prior high or initial high of said rally. But the fundamentals are really what makes further macro downside inevitable. It's difficult to imagine any meaningful macro improvements over the coming week, but it's very easy to imagine the picture darkening. Jobs report tomorrow, big banks kick off earnings, September CPI. Miracles possible, but it's irrational to be an optimist with these events looming on the horizon. Okay? So again, you guys, and I'll just go like scroll like, this is what pretty much every day looks like. A lot of times we cover growth stocks. This is more macro, but join the winning team, you guys. First link down below. Last plug. Let's jump into the charts. And again, I think it's likely that we see 340 a lot sooner than later. And I do think that this lines up beautifully. The SPY in between these two yellow parallel lines, that creates a descending channel pattern. SPY, series of lower highs, lower lows, descending channel. I think that the SPY intersects with many long-term trend lines and many levels that I've had drawn for quite a long time on the date of the CPI report, which is October 13th, because that is the day where the lower line of lower line of support on this descending channel perfectly intersects with many trend lines and just this whole region, 335 to 340 region. So I think a week from today, the SPY sees 340. And I do think that it's very possible that that could be the macro bottom. Could, of course, go lower. 35% correction for the SPY would bring us down to 310, which I think is entirely possible. That is a historical recessionary pullback after the year 2000. So that's possible. But personally, I'd be happy taking many profits from my puts. If you guys have puts, if you guys want to trade UVXY or whatever. SPXU is a good stock you can buy if you just want to buy shares. SPXU, the SPY goes down, that goes up. So personally, 340 is my target, and that is where I think the SPY will go. Take a quick look at Dixie. We close it out with Bitcoin. Once again, Dixie, let's go to the daily right here. Dixie, first of all, daily Stokes curling up. That's very bullish from a medium-term perspective. Dixie is out on an absolute tear and one of the most beautiful ascending channels I've ever seen. Recently tested resistance, bounced perfectly off resistance, came back down to the 110 region. I said in my newsletter, don't see Dixie getting below 110 in the near term. Got just there, but bounced perfectly off of the 110 level, as well as kind of this previous region prior to the recent rally. So a lot of terminology going on here, you guys. Sorry for the stumbling, but Dixie, just looking at this, given the upcoming CPI data, given the climate, I think the dollar is going to appreciate in value, and I do think that the Dixie will ultimately see 116, which is a few percent up from here. I do believe the Dixie will see at least 116 prior to October 21st. Okay, and again, if you guys know why that date's there, you know. If not, it's all good. But before October 21st, I do think the Dixie will see 116. Close it out with BTC. BTC did break macro resistance. So again, this orange trend line is a long-term line of resistance, macro resistance as I call it, because that dates back all the way to Bitcoin's all-time high back in November. Okay, so since the all-time high, Bitcoin has not been able to break above this trend line. Just did a few days ago when I made my last video. Since then, we've broken back below it. We're really crawling against it. And as I said in my newsletter today, I do think every time in the past when you see a break of significant resistance and you do not see an immediate rally, like a nice, if we saw like a green candle, one more green daily candle right here, I would have been locked in. But that's not the case. This is what I was worried about in the last video. If you guys watched that, worried about a bull trap. This is looking like a bull trap. When you just crawl, it's a slugging, it's slithering along the line of resistance and going down. That typically means you're going to experience a breakdown. And I do think, again, given my stance on the markets, I would love to see Bitcoin break correlation like it has over the past few weeks, but I don't think that's going to be the case. Daily Stochs curling down. Although I want to be bullish, it's just difficult to be bullish yet. And I do think more downside is ahead for Bitcoin. But again, Bitcoin and good. Riot blockchain, I'm excited about. So many other names on the watch list I'm excited about. So again, if you guys want to know what exact put positions I have right now, what call positions I have, because I actually have a lot of call positions on deck as well that I look forward to reinforcing with some profits from my puts. Once again, you guys, first link down below, join Waves Capital. I will see you guys tomorrow morning. Close out the week with a bang. Let's hope so. And yeah, I'm probably not going to be posting a Sunday stock watch because this is just really covering the next week or so. So I'll see you guys. See your YouTube videos. See your YouTube viewers in the next video, probably in 3 or 4 days. And yeah, Waves Capital. I'll see you in the morning. So until then, you guys, always remember, take action, make waves. Peace.